to this one. Good
Good
morning.
morning.
Hey guys.
How's it going?
Before we
Good.
hit record on this, we were determining what color shirt Tucker had on. And what was the consensus, Tucker?
I think we decided salmon.
Yeah,
Okay.
It's
All right.
not quite pink.
Right.
It's
was really
definitely more
well.
orange.
Yeah,
Yeah,
looking
it
good. Really sharp today.
accentuates, makes me look kind of tan-ish.
Right. Well, hey, only the best for these recordings.
That's
Very
right.
We gotta
Absolutely.
look our best. So, Tucker, you took the cake today with the color shirt. Usually it's the female in the room, but the salmon color
You
that
don't
really
like my
changed.
green?
Yeah.
I think we complement each other well.
Yeah,
I
there
think
you
we
go.
do.
There you
Yeah. Got
All
some
right, guys.
salmon and vegetables. There
There
you
you
go.
go.
There
go.
you go.
A
Salmon and
well-balanced
vegetables.
meal.
Yeah, I don't know what white does, but hey, we digress.
Potato.
Match it. It goes
Yes.
with everything. It's your card.
Yep.
Yes.
There you go.
All right,
So
guys.
thank you all for being here. I think Julie, what topic do you think we should tackle today?
So I thought currently where one of our clients has come to us with this situation, and oftentimes clients do come to us that have come into an inheritance. So may have not had a ton of money invested in the markets before now, and now they've inherited a significant amount of money to them. And they come to us for guidance. So I thought maybe we can walk them through like the process, the thinking process behind, once we do get this money, what do we do with it? What are our options outside of, sticking it under our pillow or, in the safe in the basement? So I thought maybe you guys could help walk through the process and how we can help.
Sure, sure. Yeah, this is a very fortunate, I'll say, because you are receiving money, but it's also a bit of a burden because sometimes, clients, like you said, come into money and they're not used to having that amount of money or that amount of money coming all at once, right? So, handling the decision-making process is that word process. It's not a, hey, let's get it done, move on. So, one of the things that I like to talk about first is before we even consider where do you put that money, meaning in the investment side of things, is there any debts that need to be taken care of? So any what I like to classify as bad debt, so either variable interest rates like a home equity line of credit or credit card rates, which are very, very high interest, student loans, car loans. So the first thing that I like to look at is the debt side of your balance sheet and the interest rates and the type of and how those interest rates move. So that would be the first thing, is to address that. The second thing would be, okay, well, what do you want to either buy or fix or improve in maybe your house, or you have a car that you're concerned anytime you go out on the road that it's going to break down. Anything that you have been putting off because it required a lump sum of money would be kind of the next thought. The third thought that I go through is an inheritance under, I would say 95 to 99% of the time is coming from a loved one. And I really like to concentrate on how can you use some or all or majority of this money to make sure that you're continuing to remember that person. If it goes in a bank account and it pays the electric bill, that's not the cachet that I was, kind of looking for. So what does that mean? Whether it's supporting grandkids, whether it's taking a vacation with your family, whether it's taking the widow or widower somewhere, to remember. So that's kind of the third priority. And then the fourth priority would be, okay, well, whatever money is left over that makes sense investing somewhere for a longer period of time is kind of the last step in this kind of unpacking the lump sum that you just received. So uh, we like to look at buckets, so short term, intermediate term, long term. So let's start with the short term bucket, Tucker. So walk us through a couple of options on the short term side.
Yeah. So this is kind of a unique time, I would say, in the sense that within the last at least probably 10 years, maybe even longer, but there's some really good short-term cash alternative options that are available. Um, one of which just being a high yield savings account. Um, so, essentially what this is it's a savings account, same as your, Bank of America, Truist banking account, whatever. And essentially you put all of your, savings into it and it will pay you probably somewhere between 3.5 and 4.5%. And with the average being somewhere right around 4. And obviously that is advantageous because your traditional savings accounts are probably paying maybe 1/10 of that. And 3 to 4% might not sound like a lot, but over a few years, to put it in the numbers, on $100,000, 4% a year is $4,000, and that does compound every month, so it does grow probably a little bit more than that, but it's not going to put you in the next tax bracket. It's not going to buy your dream house, but it's putting your money to work for you, which is a very advantageous thing to do. The other thing you can do are CDs, certificates of deposit. These are kind of like essentially pledging your money for small periods of time, 3, 6, 9 months, 1 year, 2 years. And they're very similar rates that are being paid. So normally a little bit higher since you're pledging your money. So those could be anywhere from 4 to 4.5 to maybe 5 in some institutions. And, basically just parking your money, loaning it to the bank for 3 or 4 months, whatever it is. And then at the end, they pay you back with some interest. So just really good options and alternatives to kind of put that cash to work. Like Greg was saying, for short-term reasons, if you're not sure what you want to do with it yet, if you are trying to come up with an investment opportunity, things like that, just really make your money work for you the best way it can.
Thanks, Tucker. And the last piece of it, intermediate bucket, which you could argue 2 to 5 years, CDs are a great option for that, or a very conservative investment portfolio that are made up mostly of bond investments, right? Then you go to the long-term side, and the first thing I like to do is fill up your retirement options. So if you're still employed, trying to get that 401k, 403b deferral at a higher rate. Now that you have some extra money to meet your lifestyle. So looking to that, looking at IRAs, Roth IRAs, if you're not employed through a company that offers a retirement plan, filling up that bucket. And then anything else, you can look at a longer term investment, which you can have a little bit more, I guess, riskier, so to speak, but more in equities because you're looking at a much longer horizon. So the one additional thing is if you have little to no investment experience, is really doing performing baby steps. It's not just jumping all the way off. We like to do a little bit of finance 101. Hey, this is what a bond is. This is what an equity is. This is the difference between large cap and small cap. Very general. Try to keep it light. And I like to ask the client, hey, how much can you retain? Right? I could talk about this all day, but this is something new to you. So, hey, how about 5-minute lesson? How about a 10-minute lesson? Et cetera. So they have to start becoming good stewards of this money that has just come to them if they hadn't been already.
I love it. This is all so good. And I love that you use the word bucket and kind of like separating everything out. I think it can be very overwhelming, like you said in the beginning, like inheriting all this money and just not having a plan and being able to make meaningful decisions that, not just make, a quick buck on this, but to actually, take those trips, make those memories with this money that was passed down in inheritance. It's really special. And I love that, we can help walk clients through this step and it's very personalized and very customized. So there's a lot of options out there, obviously, but that's why definitely leaning on your financial advisor to help hold your hand through the process. So thank you guys for your time. and have a
All
great.
right. Good to see you all.
Good to see you.
Thank you guys. Have a great week.
You
All right.
too.
Take care.